Let's get a check on the technicals. Chris Verrone, a Strategas research partner, is standing by at the plasma. Hey, Chris.
Hey, Melissa, how are you? And frankly, when we look at the response to the stock after hours, really fantastic. They tried to sell this. 102, boom, right back to 105. That's how we want to see names and uptrends respond. And when we look at the longer-term Microsoft picture, there's no other word here to describe it than an uptrend. Every single time that it checks its trend line, it responds. It did it a few weeks ago. It responded here again. We think that 100 level is great support. Ultimately, you stay long. Two more names that I think in that context are worth highlighting here. This is Apple, biggest stock in the world. For a stock that gets a lot of bad rap here, it's still a big outperformer this year, up 13%. And when we look at the price action this year, great reversal off the January lows, retested, held the lows, and now holding the 50-day average. We think that 190, 191 level is good support. Ultimately, 210 is your target here. And then Alphabet, another name that held up to really interesting news this week, already making new relative highs. And when we take a look back at the chart over the last several years, every single time it consolidates, it resolves higher. It's doing it right now. We think ultimately that means Alphabet up. Microsoft good, Apple good. Own this one too.
Come on over, Chris. Michelle will bring the chair in.
What happened to the days when you would say, "Hey guys and gals"?
Long gone.
Yeah.
Those days are long gone. Ancient history.
It's an automatic with Chris.
It's an automatic.
Yeah, well, it should be.
For the people.
Do the cues look as good as those three charts?
Yeah, and I think what's interesting, when we look at tech broadly, 80% of the sector is still in an uptrend right here. Now, that number was 90% a year ago, so is it quite as broad as it was 12 months ago? No. But is it narrowing? Not really. I think when you look at this group, it's not just the big ones. Look at the payment processors. Look at PayPal. Look at Square today, right? There's a lot of names in this group that still act really well. It's hard for us to get bearish when that's the backdrop.
The S&P, we talked about this a number of times. Tested the lows 3 or 4 times. Now we're here with 2,800. Is it a foregone conclusion that we test those highs we made in January, whatever it was, 28.85 or so?
I think you're going to see the highs here probably sooner than later. And the one idea I kind of reject is that this market has narrowed dramatically. I know that's been a popular topic recently. If you reverse weight the S&P right now, it's still up about 5% year to date. So cap weighted S&P up 5, reverse weight S&P up 5. That doesn't sound like a market that's narrowed dramatically to us.
How about those stats that say like the biggest 4 stocks account for 84% of the gains in the S&P 500 for the first 6 months of the year?
What that doesn't tell you is that that's true almost every year, especially in a year where the S&P is not up that much. It's very easy
Chris,
for the big stocks to contribute.
And I get that narrative. Yeah. I mean, it's simple to debunk, but I don't think we've ever had 4 or 5 stocks that all have $800 billion market caps. And so if you ever had them all going in the same direction, isn't that sort of the risk? Because right now we have a situation where, yeah, Netflix is much smaller. It was down 15% the other day for a quick, but it didn't really shake too much. You know what I'm saying? So isn't that the risk, is that that if they all were to go in the same direction?
That's a great point. But what I think is notable, or maybe let's say it would be a greater risk if they were the only 4 or 5 names working in the entire market. And that's just not true. I mean, talk about some sectors that haven't been involved that are starting to show up recently. Biotech's been dead money for 3 years. It's back on the tape here a little bit. Banks have been dead money for 5 or 6 months. They've started to show up here a little bit. So if it was just those 4 or 5 names working, I think you have a great point. But I still think we have time before this gets too narrow.
All right, Chris, great to see you. Thank you. Chris Verrone of Strategas. So there are sectors showing up to the tape now, as Chris says. Banks and biotech. Would you rather?
Oh, I like that. Would you
Brian Kelly,
I'd rather banks. I'd rather banks at this environment. I'm not worried about the yield curve flattening. I think the banks have good support here. That's where I'd rather be.
Pete, you're in both.
Is it banks or biotech? Is that what it was?
Yes.
Because you kind of jumped the shark on me. I didn't hear the whole thing. Oh, I'm actually good. As much as I love the banks, I'd actually lean right now towards biotech because I think there's incredible upside right now.
Yeah.
You know, I know that everyone's really high on the banks now. They had like a good week. You know, they're still like down 8% from their highs. You know, they just don't act well. I mean, I know that they had a bounce. They just don't act well, and I don't know what it is, but they have not shown up.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.